DTN's Todd Hultman is our corn and soybean market analyst this week. The USDA's weekly crop progress report shows 75% of this year's corn in good to excellent condition, the same percentage as last week. With 92% of U.S. soybeans planted, the agency rates 74% of that crop in the best two categories, an increase of 2 points from a week ago. Before the planting season, the possibility of corn prices above $4 a bushel and double-digit soybeans may have seemed remote. But alas, here we are with soybeans recently making a 2-year high and, as Reuters noted, the longest bull run in more than 40 years. We talked with Todd Wednesday afternoon at DTN in Omaha and started by asking how we got to these price levels.
Jeff, it's been a fantastic switch, and I think a lot of people just didn't see it coming. Really, it's come from the demand side of the market, and it started in the new crop soybean spreads, as best as I can tell. Back about mid-April, we started seeing those spreads turn to a bullish inverse. What that means is commercials started showing a very strong interest in buying new crop soybeans and meal. That drove things up. At the same time, we started to get a stretch of dry weather in Brazil for their second corn crop. That caught them off guard, quite frankly, and so there end up being shorter corn supplies than they expected this time of year. The new crop demand drive that I mentioned in soybeans just has continued relentlessly, I think, beyond anyone's expectations. So in the big picture, the story's been all about demand, and it's been quite impressive.
Can you explain more about what role the funds have played so far?
Yeah, when this all started, as you can imagine, the funds were bearish in both corn and soybeans, so they were short a lot of contracts. And then when that demand changed, they had to go with it and to go with the trends. And so not only did they reverse long, though, we've actually seen some fairly bullish enthusiasm now in both corn and soybean markets. So the funds have played a big part in the rallies that we've seen the past 2 months.
The forecasted heat that we're seeing, at least in this part of the country, over the next few days to a week, what role do you think that has?
I think it's going to continue to be a very important part. And really, up till now, we have not seen a crop concern in this rally. It's been mainly demand-led. So here we are in mid-June. We're talking about temperatures in the hundreds. Here in Nebraska, we'll probably have at least 2 days of that before we get to even Sunday. And the rain that just went through this week in the northern Midwest, I think, was smaller in coverage than was earlier expected and lighter amounts. So a lot of the Corn Belt, the question is going to be, is there going to be enough moisture for the Corn Belt to endure the day after day in the 90s that we're expecting to see?
Eastern Corn Belt, is there a concern about moisture right now, or what kind of condition is that crop in?
Not so much in the east. They had a lot of precipitation earlier in the year, and really the entire Corn Belt started out with good, adequate moisture, and we're seeing that in a high crop rating. But my concern is about moving forward, so especially in the western Corn Belt, are we going to have the moisture there?
Let's talk about ethanol. What is the current status of ethanol?
Jeff, we just had a weekly report today of ethanol production, and we hit another new record high, well over 1 million barrels a day. That's a very strong pace. We continue to see, we saw bullish ethanol demand last year because gasoline prices are low, and when they're low, we all buy generous amounts of gasoline and ethanol included. That continues so far in 2016, and that's been a nice supportive factor for corn.
You wrote this week for DTN about India and the need to focus on India, or at least be aware of India in the future. Why is India important?
Absolutely. I don't know if people understand right now, India is the largest importer of soybean oil in the world and has been for about 3 years. Now, most people understand and say, you know, India's not a big meat-eating country. They're known for their vegetarian ways, and I understand that. But what we're looking at here is India's set up very much to follow in a similar path that we've seen China go on. China started their market reforms in the late 70s. India started about 1991. Now, India may come along a little slower than China did, but they've got the same structure of a land of a lot of people with significant poverty that is experiencing very rapid economic growth right now, and that's going to bring more numbers of people into the middle class. And when they get there, they like to eat a little better, and that really helps our grain demand.
As we look ahead to the big reports on June 30th, are there specific things you're watching for?
Yes, and both sides. I think the acreage numbers are going to get a lot of attention, of course, and specifically the soybeans. And the big question there, how big of a soybean planting are we going to have this year? Was there a big switch from corn into soybeans? I can almost see both arguments, but I think a reasonable estimate for soybeans is somewhere in the 84 to 85 million acre range. If we put all the numbers together, that puts us just shy or very close to a 4 billion bushel crop, weather permitting. So that could be a bit of a bearish concern on the soybean numbers. On the grain stocks, however, that's going to tell us more about how this demand has actually been going. Now, a lot of the demand concern we've seen so far has really been pointed to the new crop months. So it may or may not show up as strong yet in the old crop grain stocks numbers, but we'll see, and there is definitely room for a surprise there.
Just ask a general selling question. You know, these are prices that we didn't expect to have, as we talked about in the beginning. Do you have a general thought about what farmers should be looking for or what to take into account when they think about trying to make sales?
Yes. Well, of course, my line every year is find at least an inexpensive put at the start of the year to protect yourself from the disaster scenario. And that gives you room to go through these ups and downs and give yourself time to see how it works out. And then the advice is going to depend on, does a guy have irrigation or not? How confident are you in the production that you can get this year, especially where we have hot temperatures in play? I think there's no question we're going to have a hotter summer than we've had the past 2 seasons. So there is going to be concern of possible crop loss there. So you want to be careful not to forward contract too much.